Welcome back. You're tuned in to Halftime Report. Well, let's focus on a couple of stocks that are moving around in our Value Plus segment. Mangalam is turning the attention to the QSR space. Mangalam, good to hear your view on some of these stocks. I hope
but
lunch
even
is
better to eat a pizza and perhaps
if you can
some
top it up
burgers.
with
Yeah. Let's see how that goes. It's a Friday. I mean, why not? I'll get some pizza. But, you know, it looks like in the movie business, you have sleeper hits, right?
Yeah.
It may look like this is a sleeper hit of the last 3 months or so. Why do I say that? Because from the lows, we've seen a big rally in a lot of these quick service restaurants, stock prices. And look at the last 3 months itself. You know, in the last 3 months, Jubilant Foodworks is up 26%. We've seen a near 26% rally in the share price of Sapphire as well. Devyani is up 23%. Restaurant brands and Westlife are underperformers out there. Westlife, after today's up move, is actually up 10% in the last 3 months. What is exactly happening out here? You know, there could be triggers for demand improvement. Why do I say that? Because one, inflation is contained, both on the raw material front and also for consumers. You know, once inflation is contained, then they can have that extra income to go ahead and spend on QSRs as well. A lot of these companies have gone ahead and expanded their footprint into tier 3, tier 4 cities where there hasn't been much presence of QSRs. So as soon as a new place comes in, you know, the propensity to consume there is extremely high. Thirdly, all of last 4-5 quarters, you know, these companies have been reporting negative same-store sales growth. So there is a favorable base scenario that we're getting into as well. And now post-COVID, what has happened is delivery and takeaway has become the preferred route of consumption in major markets. So these guys are, you know, making their stores more amenable to delivery and takeaway as well. And they are also at the same time taking steps to revive dine-in through offers. I remember Domino's having a 99 rupee lunch offer if you are dining in. And that's what the management had told us as well, that they're looking to arrest the decline in dine-in while they're growing stores as well. And we've seen signs of recovery out there too. Domino's like-for-like growth, if you look at it, you know, the last 5 quarters, 3 of them have been negative, one largely, flattish, and the last quarter we saw an improvement of about 3%. Even if you look at McDonald's, you know, while there has been a bit of a decline, it suggests that the base going forward is getting a lot more favorable. And that's what Goldman Sachs is betting on for McDonald's as well. They are saying that, there is time for them to upgrade the stock to buy with a target of over 1,075 odd rupees. They say that the recent launch that the company has done, McCrispy, is a key catalyst for recovery. Why is that? Because remember, 10 years ago, they had started a new addition called McSpicy. So you had McSpicy Paneer, McSpicy Chicken, McSpicy XYZ. So it's the first new core addition that has come in the form of McCrispy. Truth be told, I tried the McCrispy Veg. It could do a little better. I think I would await your comments on McCrispy Chicken to tell me whether, you know, crispy chicken will do well or not, largely given the tailwinds that we've seen in chicken sandwiches as a category as well. And globally, McDonald's is actually focusing on the chicken category, and that should help Westlife as well. And they expect the SSSG to start recovering in the second half, aided by a softer base, and they forecast high single-digit SSSG for FY26 as well. And it's not limited just to burgers. Jubilant Foodworks as well. The management was recently at the Jefferies conference, and they said that the industry itself has started to grow once again in volume terms. They're focusing on growth through innovation, marketing, tech infra, and their own delivery feed. So, with Zomato and Swiggy coming in, the big moat for Jubilant Foodworks will be their own delivery feed. So that really does well for them. They see large headroom for store expansion. And speaking about chicken, once again, you know, it is 50% of the CEO's time is spent on scaling Popeyes the right way. So they're looking at Popeyes as one of those growth parameters. So you have KFC doing well, McDonald's focusing on the chicken sandwich category, and Popeyes also scaling. So for those who eat chicken, there's a good time. And if you look at the valuations as well, you know, they've never been particularly cheap, but 2 years forward and 1 year of underperformance may have made them a little more favorable. Westlife 29 times FY26 EV to EBITDA, Jubilant Foodworks 26 times, the others trading between 16, 19 for restaurant brands and Sapphire, Devyani at 24 times as well. So the question is, are QSRs looking to come back in fashion? Is this going to be the sleeper hit of the second half of this year?
Lovely. Thanks a lot for that, Mangalam. And I look forward to the crispy, burgers or pizza, whatever else you want to treat me to. But let's focus on Newland Labs. That one's surging in trade.